Well, it's not looking good. The most probable outcome, exactly what we spoke about yesterday, has taken place, which was price rejecting. Asia pumped slightly. New York dumped price, dropped it down into the lows, and we said those lows are very likely to fall through, and that's exactly what we've now seen. Price has now moved into new lows. Well, what's next? Is this the confirmation that the bear market is truly on? We'll talk about that in today's video. Let's get straight into the show content. Smash the like button and let's go. Let's get straight into it. Or let's just get the chart up over there. This is your picture, not really health and fitness, right? More like sickness and disease within the crypto spaces. Everything is down double digits, and it is very, very, very brutal out there, especially because I just went through the whole list of altcoins, and there's very few things that are up. Everything else is in price discovery towards the downside. Let's talk about it. Let's have a look at things. It's going to have to tie in with the low time frames. Of course, there's always an opportunity for a bit of a bounce, but will that shift things in the high time frame? That's what I want to talk about. I'll settle nerves very, very, very quickly and tell you that $88,000, that's going to be the level. That's going to be major support. Stay until the end, and I'll show you why I'm saying that. And I may even be willing to allocate spot back into the market at $88,000. But again, just to be clear, that would only be purely for a technical bounce, nothing else. I'd play the bounce and I'd move 100% back into cash once again. So let's go. Let's get into it. I have said for weeks now, months actually, not even months, the whole year, that I believe it's best to be a trader within this current environment. And that's got a lot to do with the timing cycles. We'll talk about that. But if you feel that you're getting wrecked and you're alone, I just want to let you know you're not alone. This is from 𝗙𝗘𝗪, portfolio manager. It's with a heavy heart, I'll liquidate the funds and return the capital bit for a small audit or tax holdback by next year's end. So basically, fund is closed, right? 𝗙𝗘𝗪 of the Big Short has closed down. Not looking good, right? There is going to be trade opportunities, one of which is gold. We've got our level. It's been tagged. We got the reaction that we're looking for. Always to get into a trade early is going to come with increased risk, which means shorting gold over here is risky, of course. But that's the price that you're going to pay if you want the early entry. At the end of the day, I'm seeing what I want, which is a rejection coming from that 0.618, the golden pocket over there, 61865 in between the two green lines, and that white line. And we drew our little trend line over here, so we can now adjust that based on those candles. And that was the zone, right? Ever since price was down here, we mapped this out and we said this is more or less the area of interest that we're looking for potential rejection. It comes with risk. I just want to be clear. Everything comes with risk. It's a calculated risk. I'm going to be taking the short trade over here. This is essentially what I'm looking for. Stop loss goes above those highs over there, and I'm looking to scale into this. Is planning. I'm planning this out to be a swing short, and this can go much, much, much lower, right? So for now, we'll just simply target, down towards those lows, and then at a later date, we'll readjust that. Right now, I just want to get into the position and begin to scale into the trade. So for anyone that's been waiting for that, I do believe that gold will top for the year within the next 6 weeks, whether that's going to be now or you're going to make another high and then have some sort of a swing failure pattern. That I can't answer because I don't have a crystal ball. I have crystal balls, but I don't have a crystal ball. Okay, cool. So let's just get that out the way. Next, the same trade setup is there, and that's going to be on silver. Silver, we said, was running a little bit higher than what we wanted to see, but at the moment, closing back down as lower highs. This is also a bit of a swing failure pattern over there. So I'm also going to be looking for the short trade over there. And this one, you got a little bit of a tighter stop loss. And that is essentially what you're looking at, right? And again, we're going to just trade it back down towards the lows, but we probably want to ride this into a much further down swing trade, right? So we'll get into this. We'll get into this later. I'll move this chart up towards the end of the show, and we can talk about a bit more of a strategy of how you can get in, but I just want to go through everything over here first. So quick look at the stock market. S&P 500 coming back down. I wouldn't bail out of the long trade over here. There's just a possibility that you come back and test some of that wick over there, that inefficiency, and then possibly move back towards the upside. At the end of the day, we've longed the stock market about 100 times over the last years. So you've had ample opportunity to get positioned over there. We can look at the Dow Jones as well. Dow Jones, same thing. Still think it will just be a bit of a pullback, put in a high low, and then continue towards the upside. And then we got 𝗕𝗂𝗀, which has come back down. We said yesterday you might get a bit of an opportunity if you just wait patiently. Also similar to the S&P 500, you might come back into 50% of that wick, 603. Give it a chance. Stop losses go below the wick that occurred that was last Friday. Can you believe it? 7 days ago. So the wick that was at last Friday's low, stop loss would be placed over there on a long trade, still looking for higher. There are things that we short on. I'll talk about that now. Apple, we took full profits over there. We're out of that trade. NVIDIA took full profits out of that trade. You do have the opportunity theoretically to re-long over here if your stop is below. Also last Friday's low. Tesla, throwing back quite aggressively. I did cover this with 𝗬𝗚 yesterday before that happened. And I said you might come back into this 200-day moving average, which is going to be 356. But you don't want to spend a lot of time here. Otherwise, this looks like a deviation of the white line, which is your highs, right? Alrighty, Meta still coming down. Google, I'll just leave that one alone. Microsoft, I'll also leave that alone. Amazon, theoretically testing into those highs. Also a gap that's being filled over there. So maybe a bit of a long opportunity over there. Let's go into some of the other crypto-related stocks. So, of course, if Bitcoin's coming down, Coinbase is going to struggle. You're now losing a very key level, which is not a good sign. Circle, price discovery towards the downside. I'm happy about that because I'm in a bet that this is going to go to $25 within the next 2 years. So we're closer towards that. We also longed Robinhood multiple times. That trade you should be out of. You would have been stopped out on the late long. Remember, we've longed this a lot throughout the cycle. It was one of the top performers. You've now put in a lower high, put in lower lows. There's a chance that this is rolling over. And then, of course, the darling child, MicroStrategy, the one that gave us the canary in the coal mine to warn us that Bitcoin was possibly going into a weak environment and maybe even a bear market. We are now down 32% since entering that original trade over there, which is absolutely wonderful. For anyone that, missed that and missed what we were talking about, you can Google what an Adam and Eve chart pattern looks like. It looks like this. You have a sharp move up and then you round over. You've now broken below the neckline of that Adam and Eve pattern, which means acceleration towards the downside. And in this environment, Bitcoin went to I believe it was $107,000 when MicroStrategy put in its blow-off top peak over here. And then we went to $126,000 when it began to round over. So as you can see over here, that would be a notable divergence. Think of it like a form of bearish divergence. MicroStrategy put in lower highs while price on Bitcoin put in higher highs. That is your bearish divergence. And if you go back to 2021, we saw something very, very, very similar play out there. In this instance, your peak over here on the Adam and Eve pattern, and I'm going to draw it out for you again. There it is. There's your Adam and Eve pattern, rolls over. Bitcoin was 65K. Then Bitcoin went to 69K when it started to roll over. So again, creating a bearish divergence. And that was your canary in the coal mine, that things were possibly not going to play out the way that all the top callers were, the people that are looking for tops around $200,000, $400,000, $600,000 Bitcoin. I'm not saying that can't happen. Let's talk about it. I want to show you the levels. There's a lot of support coming in at 88K. And if price can bounce out of there aggressively, you're probably not going to go straight to new all-time highs, but maybe you're going to put in a bit of a pullback, a high-low, reaccumulate. Maybe then there's a chance. But again, I prefer to stick with what the historical cycles have shown us because that's the data that matters. So anyways, all these trades we have taken over here on BTCC. For anyone that wants to take the same trades, they are giving a $10,000 sign-up bonus. Use the link in the description below. You also get 40% off of your trading fees, which actually over time will add up more than whatever your 10% deposit is. So link is below if you do want to take that trade with us. Use that to support the channel and get your bonus. And that is the best place if you want to take the gold and silver, right? Which I'm going to move up towards the left-hand side so we can get back into how we can scale into this trade, right? So let's move into crypto. Another thing that we warned of is the timing cycles. Do not fade the timing cycles. You can see over here that the price cycles topped out around that 1,060-day mark. And that's pretty much where Bitcoin topped out this time. $126,000 coming in. How far into the cycle? 1,063 days. The 2021 cycle topped 1,059 days in, and the 2017 cycle topped 1,067 days in. So if the top is in fact in, and we're going to talk about that and the probabilities around that, well, then this time was no different. It was pretty much spot on, and you get the diminishing returns, which is also expected. 2017, 2021, even less. So orange ran much higher, green ran less, purple ran even less than that. And there we go. So we've met the timing cycle top. That's one of the things that you need to look at. Go and vote over there as well before we get into all the data. Is this the bear market? Has it arrived? Is it here? Are we officially in a bear market? 29% of you believe yes, which basically means 71% of you are on the, you're on the fence. You're not 100% sure. You're not convinced. Whereas some of you are saying, bro, just chill and buy the dip. That's 30% of you. So there is still some hopefuls within the group, right? We'll talk about what you need to see. As always, I try and give both sides, the bull and the bear case, and what you would want to see if you're bullish and what you want to see if you want expecting bearish continuation, right? We cover both ends. So don't go anywhere. Now, we spoke about the confirmed expansion of the volatility. As soon as you broke above the green line, that's your 10 percentile mark. That told us, hey, you know what? A big move is coming and you should take it seriously. The move is likely going to be real. And you also broke out of the trading range. You can see price was capped within a very tight trading range. We took out that yellow line, which was the previous month's low, and we began expanding. That's confirmed. That expansion is taking place, and there is going to be key support, right? So first area, you're seeing again that $88,000 number come into play, and that's all situated around this candle over here. This is the candle that occurred in the third week of April, which was quite a large candle towards the upside. When you see large abnormal candles larger than the rest, it signifies inefficiency within the market. Markets prefer to trade efficiently, which means they oftentimes come back to retest or revisit some of those key levels. So you're going to see this number come up a few times. Now, we did say on the daily time frame, most of these rallies are not to be trusted because they met with incredibly low volume. And we're saying that as far back as here. You can see what the volume looked like. Very, very, very low volume within that environment, which said you can't really trust these rallies, right? Price came down, and obviously every little bounce after that was met with lower and lower volume. There was the next bounce, even lower volume. The next bounce, a little bit high volume, but the problem is you had already lost those key levels, which was 108,388. So it still remains the same until such time as you can get back above there. It is inherently bearish within the market, right? You need to recover back above this level. The good news is we can keep dropping our validation or invalidation zone depending on if you sit on the bull side or the bear side. So basically, if you're bearish, you can remain bearish until such time as price can now reclaim this level, and we can drop it, right? We can drop it now. If bulls can get back above 108,387, you can start to get a bit more optimistic and say, maybe there's a bit more of a bullish outcome that's coming into play. This was a big shakeout and everything is fine and hunky-dory, right? If you're bearish, well, you hold your bearish bias. So if you're holding on cash like I am, you hold on to your cash until such time as you get invalidated on the bearish bias and reclaim that level. 108,387. That's what we're waiting for over there. Yes, you do have a pivot level over here in the form of these lows, the red trend line. We have this expanding, megaphone pattern over here coming into those lows, coming into those lows. So there is a chance of bouncing. But we also spoke about this and we said that, well, we have this death cross, which is inevitably going to take place. The problem is, even if you suck like a magnet into that death cross and you rally into it, well, the dotted line over here, which is coming on Thursday, the 20th of November, will be when you get the next bear moon. And the moon phases have hit absolutely solidly throughout the cycle. Basically, when you get a bull moon, you get a small pump. When you get a bear moon, you get continuation towards the downside. So even if you do suck like a magnet into that, this is going to be a cluster of mass resistance, and it's going to print the bear moon, and it's unfortunately probably more likely to continue price towards the downside until some of these key levels are hit, like $88,000, which we'll get a bit more into in a moment. Now, if you can see price traveling towards that $88,000 region, and guys, remember, we can't control the market. We can only react to what we're seeing within the market and control our risk within the market. So I want to be clear. Even though $88,000 is a clear bounce level, there is a chance that you don't even make it there, right? The books are very thin, which means there's a lack of liquidity in the market right now, which means you know, if one big hard-hitting player comes into the market now and starts to buy up price, it is going to pump. It is going to pump. And that means that you won't hit that $88,000 now. I'm not suggesting that you're just going to do that, right? That's not what I'm saying. You might do this and then later on do that. But I do think eventually that 88K level is going to be hit, right? So pay attention to that. For all we know, this could be a local low. And in order to determine that, we're going to figure that out using the low time frame like the hourly. I'll show you what sort of profile you're looking for to signify that, right? So therefore, you are now, instead of panic selling out of the market, that's not a good idea, positioning your mindset to look for opportunities to play the bounce. And the reason why is because our skew has become increasingly negative. We've seen negative 4.73%. That's quite a lot. We've also seen one of the criteria that we look for, which is the 24-hour liquidations above 1 billion. Of the majority of those came from the long side, which shows that like panic selling now is insane because you've already liquidated the majority of those longs. Therefore, low time frame traders, you're probably actually more looking for long trade opportunities and bounces, right? We also have the volume, which continues to decline. This affects the medium to long time frame traders to suggest that do not get long as a medium time frame trader until such time as you reclaim this level. I even price labeled it, so don't ask me what is this level. Just zoom in on your screen and look at the level. It's there. If you reclaim this level, volume rises. That's going to look good, right? At that point, you probably see a snapback over here where the low time frame traders have jumped in for their quick long trades and they get an early entry, but you have to be skilled enough to do that, right? We've seen the fear and greed index as well shift quite aggressively. We're now down at 16. I guess that's your one bit of hopium. Your one bit of hopium is that if you look at the chart, and I pop the orange on and off the screen over there, just to relate what happened in the prior times that you hit those low numbers, right? Anything from like 0 to 20, well, it has elicited some pretty sizable bounces, right? So it's very annoying that it keeps going off the screen, but there it is, right? Have a look at those. The 10 to 20s, that was your COVID lows, price rallies out, right? 10 to 20s, even though you were breaking down over there, it still elicited a pretty big bounce. 10 to 20s, these also still elicit pretty big bounces. So you want to line this up, these potential bounce zones, with some key technical levels, and the bulls have their work cut out for them, right? Here's your other good news, right? You do have theoretical monthly demand coming into the zone. I say theoretical because if this is a major top, sometimes things unwind very quickly and you can easily go all the way through that. But it's theoretical in the sense that, well, if this is not the major top, then that would be where your 10 to 20s are hitting on the fear and greed, and you have an opportunity, to bounce out of here. So keep an eye out on that. Guys, give me one moment. I do just have to quickly take a screenshot of something for my team. There we go. I got it. It's from one of your guys' comments. It's something that I warned them of. So I need to take that screenshot for proof of what I told them. And then now you guys are saying the same thing in the comments. So thank you for your patience over there. Anyways, let's get into it. So theoretically, this is monthly demand. And what price does it come in? Well, the mid-level of that is around that 88K level. So fear and greed dropping into extreme fear, price coming into monthly demand. Therefore, it's a little bit too late to exit over here. In fact, I'm going to be looking for the long opportunity. First level of interest we have over here is going to be the golden pocket. But my more technical level that I prefer is going to be that fair value gap, which is coming in at that 88K zone. So basically, when you have multiple levels of potential support, the way that I look at it is I'll zoom in on a lower time frame. I'll mark out with a triangled approach. Triangle approach or pyramid approach, meaning you buy smaller amounts at the top and large amounts at the bottom because it's closer to invalidation. I'll mark out the area of interest and then I'll zoom in on a low time frame and look for those signs of reversal on like a 5-minute or 15-minute chart. So that's what you're waiting for over there. But this doesn't change the high time frame or the medium time frame. This is a short-term bounce opportunity. The medium or high time frame is under a lot of stress and trouble. And the reason why is you broke your stop and reversal indicator, which is rolling over and declining. You've been spending time under the 21 weekly exponential moving average. And as long as price is capped below that and it's angled towards the downside with the break of the stop and reversal, it's bearish. As simple as that, right? You're out the market as an investor. So no need to change the terminology over there and sugarcoat it. It is what it is. Now, also, there's more confluence. That 88K level, as you can see, comes in over here at that fair value gap. It also so happens to meet exactly with the bottom of this channel. This is now looking at Bitcoin on the 5-day time frame. So I do think that's a very strong bounce zone. So there's your one low, high low. We narrowly missed that over there. You know, you could narrowly miss it again. So that's why you want to scale in if you are looking to buy the dip over there and you think that this is going to bounce price. So I do think this will bounce price. The thing is, I don't think it's going to send price necessarily into new all-time highs. I think that if you bounce price over here, it's going to probably meet with some sort of a lower high, a complacency bounce, and that's where things will roll over and begin to break down. But nevertheless, we've seen this parallel channel work. It's been very, very valuable, very, very useful, and any moves that happen towards the upside are going to be met with a lot of resistance, because you can see there it is. There is your 3, your 9, and your 30 moving average, all bearishly postured. Why? Because the yellow, which is the short-term moving averages below the medium, is below the high time frame. And as they begin to spread and open up over there, you know, it becomes a little bit more of a trending move. So therefore, bounce zone. That's your bounce zone. But that's all that is. It's just a bounce zone. And then you need to expect lower highs to occur after that. So from current price down, that is about another 8-ish%, 8.6%, and you're going to hit that level. And it depends when that level gets hit, right? If price just consolidates over here and only hits it in a few days, it might be more than around that $90,000 region. Okay, cool. So we got that out the way. I don't think bulls are going to save this. We spoke about this. We said that you really are running out of time as a bull, and you need to see price snap back hard and aggressively towards the upside to reclaim the yellow line, which is your 50 level. You know, you don't want price to hang around here too much. Now, if you put in a big rally by the end of this week, there is still some opportunity over here, right? There is an opportunity that because this RSI is moving right now. But let's just say it's not looking good, right? It's not looking good. MACDs are rolling over, already crossed bearishly on the weekly, bearishly on the 2-weekly. The 3-weekly will definitely cross bearishly because Bitcoin has to rally to $121,500 before the end of this week to avoid this. So this is unavoidable. This is happening. And then your monthly, as you can see, for the first time, is now starting to get a red profile. So if you hang around here, this is happening. And this has confirmed that you're in a bear market every single time. Just by the way, there hasn't been a time where the monthlies cross down and you're not in a bear market. And we know that this has all been coming off of a lot of bearish divergence, right? In the form of price putting in higher highs, but the RSI running into lower highs. There we go. Not good, right? Not good. Books are thin. There it is. Weeklies have been wiped out. Let's go on the daily. What does this look like over here? Dailies wiped. Everything's wiped in terms of the order book. We spoke about this yesterday. Price below the super guppy, the EMA ribbons are expanding. And we said if you come into these lows again, which you're probably going to set the high of the day. We spoke about this all week, right? We said, I think since like Monday, Monday price was up here. Tuesday price rejected, came down. We said Wednesday, probably during my show, the candle was green, right? I said probably going to be the high of the week and it's going to turn, or the high of the day, it's going to turn red. It did. Same thing yesterday. Said candle's green, probably going to be the high of the day and going to turn red. And then you're going to be trading at the low and then you're going to open up below that. And that's what's happened now. Now you're crashing. Everything is coming down. Okay, cool. So what about the very low time frames? So you have a nice hourly reversal right here, right now, as we on this video. But what you need to see is you just need to get a bit of a trend shift on the hourly to get a bit of a trigger. So the trend shift is, of course, going to come if you start to break back above these highs, which means you need Bitcoin to get back above about $100,000. That's at the time of this video, right? This is going to change over time. Otherwise, I'll just continue to ride the trend all the way down to the yearly open, which is at about 93K. That might provide a little bit of interim support on those low time frames. So to get bullish, this is what you need to see. I'm going to draw it out because there's multiple different scenarios. You know, on the hourly to get bullish over here, very nice reversally looking candle on the last hour. So, you know, price could move up over here. Either you rally straight up through all of this, resistance over here, through all of that, come down and put in a high low. That's one scenario. You only get confirmation of that once these two things happen. Let's draw it out. Once these two things happen, the confirmation only comes when you have that and that, with some form of bullish divergence. That will look good, right? On the hourly to trigger an early entry into a long trade if you're not going to make it to 88K right now. Okay, because that's always possible. Alternatively, you need to see price maybe move up and still set in a lower high, but come down and put in a higher low over here. Then that becomes an early entry with stops below this wick over here. And then you're longing straight into resistance. But if you smash through that resistance, well, you have an early trade. So those are the two scenarios. Otherwise, just ride the trend all the way down. There it is. You can just see lower highs and lower lows until you hit those key levels that are lower. All right. That's what we're waiting for over there. So looking at price, on the hourly, on the 15-minute, not much to comment on. It's not looking good. Okay, it's not looking good. Let's check the hourly. I like the hourly candle, but you get a lot of those, right? If you look at this over here, that was also a beautiful candle on the hourly that looks like it's going to reverse. These low time frames will trap you a lot if you're studying the candlesticks. They're not always going to be too helpful. This is kind of on the dailies and things like that. You're kind of in the middle of no man's land. You do have a trend line, so you're trying to fight to survive with that trend line right now. I guess that's where some of the buy pressure came in. I'll show you what I mean. Let's just get that back into place. So this is where some of the buy pressure is probably coming is around this red trend line, which if I zoom out, you can see it over here. And I'll zoom all the way out. There you go. So this is a trend line that goes all the way back to the 4th of August, tested it again on the 6th of September. So that's 2 touch points, 3 touch points on the 6th of April, touched it again on the 8th of April. So, now you're on like 4, 5, and now you're breaching through it. So there is a bit of an opportunity over there. He has a good comment over here. So James Wynn was right. I say it's a good comment because it's not about being directionally right, but about your risk management. He still lost all of his money. So I don't know. You tell me, what would you rather have, $100 million and be wrong, but you stopped out because you're wrong? Or would you rather have 0, but say that you are right once out of your 4,000 calls? Personally, I'd rather take the $100 million. Okay. Alrighty. Let's see. What else have we got, guys? We can look at some of the outs. Of course, we need to look to USDT dominance. Vitally important, because this helped us to avoid total catastrophe and disaster. It was the USDT dominance chart, which we said was forming this ascending triangle, and it broke out. And now you're very close to the measured move. So what I would suggest, if you're a low time frame trader and you want to look for the long opportunity, if the week can be salvaged by the bulls somehow, they're not going to avoid the 3-week MACD bearish crush, right? By the way, that's happening. That's definitely happening, but you can get some sizable bounces. So if you want to trigger the long trade over here, use the USDT dominance as well, which is coming into that 5.868%. That is your exact measured move. Now, I want to be clear. Right now, this is in an uptrend, and I've been telling you that for a lot, right? I've been telling you that the whole time. So if this rallies through, flips that into support, disaster, it's over. At that point, it's over because your weekly is closing out of here. Your weekly starts to trade back. Let's compare those two levels. So you flip this into support over here at like 5.886, and it begins to mark up more aggressively. Now you kind of have this whole cluster that's being reclaimed, right? You can start to see that might even begin to create a cup and handle formation over there. So you want to be really, really careful of that. You want to monitor this USDT dominance chart, and you want to assess what does the weekly look like when it closes. Right now, the weekly is breaking out of this level, right? This is a proper breakout. If you were viewing this as any other 5-minute chart, you would have said that, you've created a higher low double bottom over here. It's a W formation. So a W formation coming into the neckline, it's about to break. This thing's about to break. Okay. We'll get to your questions as well. 2,000 stimulus checks will bring back liquidity. I don't think so. It could, but who's to say that they're going to put that into the crypto market? There's no guarantee, right? This is in 2020. That's what happened in 2020. There's no guarantee that's going to happen again. So yeah, we'll look at altcoins, guys. Let me know in the chat there what you want to look at for altcoins. You guys say, Gino says, Soul's cooked. Remember I said short sold from about $175. It's probably going to 100. It missed it by like $2, that short trade. So unfortunately, we didn't get that one on the table. But anyways, for those of you that want to still get a Bitcoin, there is still an opportunity for that. Link in the description. I arranged that specially for you guys. The spinner game, right? Go on to Blowfin over here. You can spin the wheel. If you're having a really bad day, you're going to land on the good luck. Otherwise, you have about 7 out of 8 chance that you're going to win something. 1 Bitcoin, you get a free month in Whale Room. You get some futures bonus, some ETH, some Solana, some Sui, or some Zcash. 1 in 8 chance you get absolutely nothing. Go spin the wheel. This also gets you into whale school, by the way. If you sign up to Blowfin, you get free access. It's a good time to sharpen your education. Okay, cool. What else? What else have we got here, guys? Let's get into, you got Pump, you got Hype, you got H-Bar, Alts are cooked. We got a lot of different comments over here. Let's get into some of these comments and we'll check things out. Little bit of hopium, right? If you wanted your hopium dealer and you want to puff, little puff of hopium over here today, it comes from this chart, ETH BTC. It's very, very unlikely that Bitcoin drops from $100,000 to $50,000 and ETH drops less, which would cause this to pump. It's more likely that this pumps because there is some sort of relief that comes into the market. So that's your hopium. Your hopium chart is the ETH BTC chart. But if this begins to roll through here, not going to be looking good, right? Not going to be looking good. Also, ETH USD on the weekly time frame has come into mid-range support. You can see range high, range low, mid-range, 3,100. There it is. We're tagging it right now. So look, I'm glad I closed that ETH trade. I would be down quite a lot if I didn't. We took a very small loss on that. Yes, poor Tom Lee. He needs a new quant. Tom Lee is not the quant to listen to anymore, right? We'll see what happens over there with all these DATs and things like that. But getting absolutely nailed. This has been brutal. Imagine that's the top. That's going to be so bad. 35.66% down. Like imagine you just put in a lower high over here, something like that. Then what does this become? Like a left shoulder, head, right shoulder, and then we just cook this thing. Look, guys, I'm not saying that's going to happen. I would say watch for major support over here. How bad could this get? Well, this could probably drop down even further. This could drop all the way back down here, and it could still possibly bounce out of there. That's about 2.7. So 2.7 is going to be a major, major level. We can also mark off. Let's quickly see what this fib, because we have a confirmed local top, of course. Let's mark off and see over here how some of those other fibs line up. And let's see the golden pocket. Where's that? Okay, that is perfectly in that zone. So if ETH gets a little bit worse for wear, maybe a little bit of a biddable opportunity over here, 2.627. I'll answer this question as well, because I'm sure many of you wonder, what is my opinion? I'm assuming you're asking my opinion about, is the bear market here? So my opinion is the following. It's going to be a little bit of a longer story, but I need to back it up a little bit, right? My opinion is that I've been saying for a very long time that as we approach this day 1,000 to 1,100, I'm de-risking massively from the market. I'm even moving into a cash position. That's what I said, irrespective of if Bitcoin was going to go higher. And then I said I'm repositioning into more an active trader, which if you read between the lines, that means I'm out of the market, like completely, right? I just take the best independent trade that we find on that given day, week, or month. And I mean, I don't know what else to say. So for me, it meant that at any moment a bear market could come. But because we're at the tail end of the 18.6-year real estate cycle and the stock market was breaking out into new all-time highs, I always entertain the possibility that, maybe Bitcoin could push a little bit higher or a little bit longer. Maybe there's one more pump. But there were enough pumps for me to say, I'm willing to take my capital out. I've made my money. I'm now here to protect that capital. But it's a difficult thing to share with the audience because everybody has their own ideas and comes at different points in times into the market. And I don't want to be, I want to help you guys learn, right? I don't want to be like your sole guru or something that's going to dictate what you're doing with your own capital. So yeah, I had to be like pretty careful with how the terminology that I use. So what are my thoughts? My thoughts are that it's still very possible that the top is in. I would say I lean more towards that it is than it isn't, but I'm not willing to click the 100% button. because you can't be 100% sure yet, right? If we close like multiple candles under $100,000 on a weekly, 2-weekly scale, that will be one sign. But then you need to see the bounce that comes off of that. And if that bounce that comes off of those closes, so let's go into the weekly scale so I can actually paint this picture for you. If I saw something like this, then I can start to say I'm 100% sure. So if I saw something like this, right? Price comes down, drawing out, price comes down, starts to close around here. Maybe it even comes lower, but then you rally up. Maybe it's going to be in Q1 of next year and you put in a lower high like that. Then I'll say, okay, I'm 100% sure that lower high is definitely in a bear market, 100% sure. Because the thing is, you could still get a strong rally out of here. Like, we don't know what's going to happen today. Who knows? Trump is even upset that you guys sold. I saw a post from him that came out. I don't know if it's true or not, but I'll have to verify that later. He came out and he basically swore at everyone. He said that like, we opened the government and now you sell. Called the B word, not for Bitcoin. He called everyone bees. So anyway, if he comes out and does something magical today, it's possible that you put in a stronger move. But I think that the days are numbered. I think that you can't ignore things like the Adam and Eve chart pattern on MicroStrategy. You can't ignore that price structure was already broken over here. And I'll highlight it exactly there, over there. This was your higher low. Price went up, put in a higher high, almost put in that bearish engulfing candle, like somehow got this little scam pump in the end that salvaged it, but it was pretty close to bearish engulfing. And then boom, you took out that low. That was your break of structure. So your hope comes in the form of the monthly chart, but based on the measured move. Remember, this was the measured move off the cup and handle, breakout, boom, it hit exact. That nailed it. It hit exact. That was your measured move. You hit the measured move. So you can come down into the zone and you can bounce. And if that sets in a lower high, then it's over. But I'd lean more towards it's over right now than not. But I still think that ETH can put in a decent move. We've seen before in price cycles, once Bitcoin had already topped, ETH went on to put in new all-time highs. So that is still possible. And then there's a question over here, right? How about the 30 cycle end indicators? I think that most models and indicators break eventually and don't work anymore. So what he's referring to over there is there's a whole bunch of indicators on CoinGlass where it says hit or miss, hit or miss. Most of these are based on on-chain metrics, and on-chain metrics are very slow and they mostly get it wrong. If the on-chain metrics levels were hit, Bitcoin should be trading at about $300,000 right now to even tick into the overheated. It's just like the Plan B's logarithmic chart, right? Plan B's little color-coded logarithmic chart. He keeps reducing the levels, right? He keeps in the first cycle that I was in, 2017. Bitcoin was meant to be something like $200,000. We went to 20K. Then 2021, it was 450K. Where did we go? 69K. This cycle, I think it's been toned down to like 300K. Where did we go? 126K. So you got to take those things with a pinch of salt. Anyway, let's get into the altcoins for you guys. Where are we at? Let's move through the list over here. Let's just stick with the majors for today because let's just be honest, everything else is rinsed. Zcash. So going on the lower time frame, complacency bounce in. Look, this thing can move. This thing can still put in some bounces, but be careful of any lower highs. Like, I'm not going to be playing Zcash myself. We took the trade. I'm done with it. We've moved on. Let's go into some of the others. XRP. So you still have these range lows over here that have to be defended. 188, but very risky. Of course, if Bitcoin is weak, it's always risky to go into anything else. This is pent up liquidity that's over here. There you go. Pent up liquidity. So if you start to break and hold below this, you can roll over and come down very quickly. Okay, Solana, we spoke about on the daily time frame. We'll probably have to use this chart. Let's quickly go to Solana on the daily. There it was. We were looking for the short trade at 175. Price came down. You could put in a bit of a bounce, but really you need to reclaim these levels now. 156. So you'll need to see a strong move up, and then you'll still get a pullback anyway. Okay, so just look for the best trades. It's the best way to go about things. We have SUI all the way back down into these lows, now trading at $1.84. You don't want to flip this into resistance. Monitor this on some of the low time frames, but dailies need to basically recover back above 223 to get long. So I wouldn't want to be long on this unless it got back above there. Sonic, just terrible. Straight down. I don't know if it's going to make new lows, but to get bullish, you have to reclaim the yellow box. It's a very long way away. Say, to get bullish, you need to get back above 20 cents. Cardano, to get bullish, you need to get back above 60 cents. AVAX, to get bullish, you need to get back above 1860. Otherwise, it's bearish. TON, to get bullish, I would say actually you need to get all the way back above here at 288. Casper came close, right? Not bad. But again, do you want a long Casper when the rest of the market looks the way that it does? Like, why would this suddenly defy gravity? I don't think that it will. But this was what I was looking for, as one of the worst case scenarios. Coming into this SL flip, resistance, support leads to the big move up, and it has confluence of the mid-level of that parallel channel that's just been, grinding it out towards the downside. But, you might need a doctor if you're interested in these things. We can refer to one to you. Okay, please email the helpline at cryptobanter.com if you want the referral to the doctor. Tron, straight down. Plasma, terrible, right? Pump, not that bad. It's okay, but I also don't think it's going to defy gravity over here. But you do have a lot of support that's coming into this zone. I think it's probably just going to grind into this region. Okay. ASTER, surprisingly not bad. So because ASTER has been holding up with relative strength, like it hasn't even come back down to those lows where a lot of the other market has, probably worth putting on your watch list. If you are someone that's looking to get those longs in, this has relative strength right now over the last couple of days. Okay, Hyperliquid, breaking that trend line, very likely that it's probably going to come all the way back down to $29. Apex, I said for a long time, is coming down to 39. I still think it's coming there. Okay, everything's garbage. It all looks terrible. I don't know. Do you want me to still continue through this list? SPX 6900 is one of your requests. We said probably coming to the bottom of this trend line or the support level, 45 cents. It's on its way there. It's going to sweep that. It's definitely going to sweep that. It's going to do something like this. And then maybe you'll recover. Okay, so yeah, not looking good. Not looking good. There's PEPE, one of the biggest memes in the space, all the way back here. And the thing is, what if this is all full distribution? Then it could end up coming down to 152 of the last 3 digits. Oh, yes, gold short. Yes, let's not forget that. So you guys are asking about that. These are risky. I want to just say it again. You have to take this with caution over here. It's risky. Like, you don't go in with your full portfolio on something that's as liquid and fast moving as gold. As gold has been parabolic, right? We're trying to cherry pick the top, which comes with very low probabilities that will be correct. So you have to be willing to take the knock, get stopped out, and then re-enter again. In whale room, though, our traders over there are absolutely smashing it on gold. There's actually a gold trade right over there. This is all thanks to Farouk, who's just been fully pivoted into gold, and he's just absolutely nailing all the gold trades. So for those of you that want to get into whale room, join the waiting list. We're going to open it up very soon with a special for you guys. If we have enough space, we'll see how it goes. It's going to be first come, first serve. I think we have space for just under 100 people. So if you want to join into whale room, use that link, right? Use that link over there below. There it is, whale room. Join on the waiting list, and then stay tuned. Within the next 2 weeks, we might have a chance to open for just under 100 people. Okay, cool. With that being said, the gold trade. Let's go into the gold trade. So first, I want to tell you my thesis for why gold will most likely top this year. It's been parabolic, so silver, gold and silver has been parabolic. We're looking for rejection more or less from this area. We said it should start to roll over to get confident of the short trade. But yeah, it's on a TD sequential. That's a Tom DeMark 9 count top on a yearly and on, I believe, a quarterly and a monthly. So basically, we're on like the penultimate top signal with the euphoria that came in everyone wanting to buy gold, fighting outside the shop. And since then, that has still been the top. So you need to go in very, very, very carefully. You can either go in with a very tight stop loss relative to yesterday's high. That's giving you a more favorable risk to reward ratio. Or you can go in with smaller size and float your stops all the way at the top there. That will give you a time to establish whether you want to get in or out of this trade. So I want to have a look at this trade over here on Pinex. So let's just quickly see on the futures bot grids over here. Let's just see if they have it. And we need XAU. Let's just see if they have it here. XAUT. Is this going to be gold? Is it the same price? 4,100. This is one place that we can take it. Yeah, 4,180. So this is one good spot that we can start to look to gain an entry. And we're going short. There it is. Okay, short. And I'm going to begin to enter into this trade over here. I'm willing to short up to 4401. So highest price, 4401. Lowest price. Let's go back to our gold chart. All right, I'm going to extend this probably all the way back down to these lows. I'll probably readjust this as things unfold, but 3,404 is going to be the next level. 3,404, 3404. All right, grids like 150. So that's what the trade looks like. There you go. That's what the trade looks like. Think of this as your long to short ratio. Scaling into the trade up there, shorting it all the way down into those lows. That is the gold trade. And now we just need to determine size. I'll leave it on 3x. Like shorts, I'm going to go with less size. I'm going to just put about 10% of this account because I have a feeling that there's still a chance we're going to, come into a little bit of stress on this trade. It might spike a little bit higher. So I don't want to go too much. I'll add maybe a bit more, or I'll just cut it if it starts to consolidate above those highs. So that's that one. And then I want to do the same thing on silver, XAG, right? Silver. This one we're taking on less risk because it's already so close to those highs. So XAG, let's see if we can find that. XAG. Do they have silver on here? Maybe they don't have silver on this one. So this one we can just take on as a manual trade on BTCC because they definitely have it there. So that's one trade, right? That's one trade. I will share this in Whale Room, by the way. It will be added to the copy list over here as well for those of you that want it. We obviously took some of the MicroStrategy trade there, and then we'll manage this BTC trade as well, which is slightly down. Okay, cool. Sentiment is very down. Yes, it is. Of course. Of course, guys. Sentiment is down. Sentiment is definitely down. Yeah, but it can get worse. By the way, sentiment can get much worse. If BTC continues to mark down, sentiment will get worse, but that's more referring to the medium and high timeframes. So I just want to be crystal clear. We got multiple different timeframes we spoke about today. We spoke about the low timeframe, the medium timeframe, and the high timeframe. The medium and high timeframes look relatively cooked. That's not a good thing, right? We don't mean cooked in the sense of a happy meal. This is cooked in the sense of you're going to lose your money kind of meal. But short term, you could come into that level and you can still put in a sizable bounce. But that sizable bounce, if it's met with a lower high, is where the cooking really begins. Because then when you break below the bottom of that parallel channel, at that point, everyone knows they're in a bear market. Okay. All right. Let's see. What else, guys? Yeah. So, with regards to the bear market and bull market, these markets are very cyclical. Just to be clear, we have been in a bull run for over 3 years. It's been a bull run for 3 years. We went long on this channel, on my show. Go back. Feel free. Literally, you can go all the way back in time. If you go on to, Crypto Bants over here, you can click there. You can go back in time. You can go to my podcast. Click over there. Look at that. They even changed my picture. Very happy face there. And you can go back. You can go all the way back in time to, I'll show you. I'll literally show you the video. We went long. Fully long, I believe it was like $16,800. So you can go all the way back years ago and scroll. That's 1 year ago, right? So it's been a journey. It's been a wonderful journey. I think it's pretty fitting that we go all the way back and we have a look at that right now. So there's the first video ever, okay? Scroll forward, I remember I was in December holidays and it was a falling wedge, backwardation in the market, basically a lot of different things going on. And that was our long signal. Alrighty, let's see. Where was that show? I want to actually just look in terms of timing when it was that we actually went long, fully long, 100% long in the market. It must be before, yeah. Where's there? There must be a falling wedge over here. Little bit more, just a little bit more over here. Was it? No, it's not there. I can bring it for tomorrow's video otherwise. I'm just curious, guys. I have to find this. 3 years ago. All right, I'll find it. So smash the like button, guys, if you enjoyed the show content. Go spin the wheel as well if you do want to win something over there. We will discuss things a little bit further tomorrow. I am going to do a video and make sure that you come and you watch the show tomorrow, because today's closes are going to be vitally important in terms of what happens with the CME market. So make sure that you're here tomorrow. And yeah, we'll reassess. We'll see where things are at. And then this changes the probabilities, right? Bulls were running out of time. It is what it is. They were running out of time. Eventually, bull markets come to an end. It depends on your criteria. Many people's criteria will simply be that if price closes multiple weekly candles below the 50 EMA, which is over here, the red line, which is at $100,000. So basically, if you close multiple candles under $100,000, their criteria would be it's over. In my opinion, this is a little bit late. I was more interested over here in de-risking on this candle, and I'll mark it off. It was this candle over here. 14th of August, bearish divergence, a bearish engulfing candle into extreme greed is what we had with low volume. So for me, this was the signal, right? That was a big signal. And we did run up a little bit higher one more time. But let's talk more about it tomorrow. I hope you guys are safe out there. Remember that it's not the end of the world. Money doesn't mean everything. And life can change very, very quickly like that, right? For the good. You can make millions of dollars in a short amount of time. If you are down and you've lost money, come tomorrow, right? We'll come up with strategies. I'll try and show you how you can make some of it back. And I'll see you guys all on the next one. Have a good day and cheers for now.